Now, our first speaker in the main session will be Trey Knippa on the gold market manipulation update. He's presented by Rutzenmeyer and Belmont. He's going to speak on another crisis that's arising that Brian touched on, and that's the war of the currencies. He is talking about a global economy-crushing collapse in Japanese government bonds and the yen. Trey has 18 years' experience as a trader on the Chicago Mercantile Exchange and is regularly featured on CNBC, Fox Business, and Bloomberg, where his currency comments are highly respected. So please welcome, I believe, a first-time speaker here, Trey Knippa.
All right, is my microphone on? You bet it is. First of all, let's take care of the attorneys. The information and opinions contained herein come from sources believed to be reliable, but are not guaranteed as to accuracy and completeness. The risk of loss in trading futures and options is substantial. Each investor must consider whether this is a suitable investment. When trading futures and options, it is important. It is possible to lose more money than the full value of your account. All funds committed should be risk capital. Past performance is not necessarily indicative of future results. There, we made the lawyers happy. Howdy. My name is Trey Knippa, and I have been a trader on the floor of the Chicago Mercantile Exchange since 1996. And I have some very good and very bad news for you, and that news is exactly the same thing. You'll have to excuse me, I'm not a podium guy. I think you'll probably figure out, and you've probably kind of surmised a little bit. Yes, I'm a trader down on the floor of the Merc. You've seen pictures on TV. It's those guys doing the funny hand signals and yelling and screaming at each other and that sort of thing. So putting me behind a podium, I think I might lose my mind. So I'm going to move around the room a little bit if you don't mind. So down on the floor one day, obviously, let's get the obvious questions out of the way right now. Trey, what is this ridiculous jacket that you guys wear down on the floor? Okay? So let's just get that, because I know everybody's wondering that. So we'll cut to the chase, okay? Well, down on the floor, number one, we've got a whole series of turnstiles outside the exchange, and that's my access card to get in there. This is what's called my trading symbol. Most people choose their trading symbols as their initials. My real name is Herschel Curtis Knippa, which makes my initials HCK. To me, that looks a lot like Hick, and I challenge you to find any Texan that wants to be called Hick. So I crossed that off the list. So I chose Waco. Most people also will go to the schools that they went to. I went to Baylor University and ran track there. In Waco, Texas, obviously. I went to TCU for grad school in Fort Worth. I also went to MIT for grad school in Boston. So I started going through the list of schools I went to. TCU was a taken symbol. Frog was taken. MIT is for those of you who've entered an order in finance, MIT is a kind of order, so I couldn't be that. So I chose Waco, because that's where Baylor is. However, the desired result was not necessarily what I planned. I have been referred to as Wacko since 1998, thanks to choosing this badge. I have been referred to as Wacko on Al Jazeera, CNN, Yahoo Finance, Bloomberg Markets, CNBC. You get the idea. So, because I said earlier that I've got good news and I got bad news, and that is exactly the same thing. I absolutely live and breathe to do the job that I do. Now, right now, you're scratching your head. You're saying, why would that be bad news for me? It's bad news because I talk too fast. I talk too loud. I'm a busybody. I'm moving around. Like I said, I absolutely love what I do, and I think I probably can convey that if I haven't managed to convey it already. Now, because I'm a trader and I'm in finance and I research and I'm a nerd, I went to MIT. I think that qualifies me as a nerd. Fair enough. Last night, here's an example of me being a nerd. You know what I did last night? I read through the balance sheet of the Bank of Japan last night. Okay, so we've ticked the box for Trey's a nerd. We got that. But because I'm a nerd, I do read a lot. And as I was trying to learn to become a better public speaker, okay, that's what a nerd does. He reads, watches videos, that sort of thing. So I picked up a book about public speaking. And one of the things in the chapter said, give your audience something for free. So here it is. Here's the audience getting something for free. If you have occasion to be in Chicago, I personally invite every single one of you to look me up, and I will have you as my guest on the floor of the Chicago Mercantile Exchange. It is really cool. We can meet Rick Santelli. He's usually around there. You will never, ever stand in a room that has a larger range of education levels and of income levels. And guess what? They're not correlated. I know a guy down there who has, my IQ is a rounding error to this guy. This guy's got PhDs from the University of Chicago. This dude is smart, and he can't trade his way out of a sack. I know another guy who literally has a 9th grade education, and he's worth $100 million. It will absolutely be worth your time. Come to Chicago. We'll go have lunch afterwards. We'll walk around the floor. You'll see the guys pushing and shoving. I can tell you all the groovy floor stories about the time I got stabbed in the back with a pen and stuff like that. So it will be worth your time. Now, so because I'm on the floor, there are these big Diamond Vision TVs, like Diamond Visions at a baseball game. And one day, up on one of those presentation boards, I saw the tail interview of a guy by the name of Kyle Bass, who's an investment manager out of Dallas. And I only caught the tail end of it. And in that interview, he said, "This is the most obvious situation in the history of finance." That's all I heard. But I was like, well, that's enough. He's a very bright guy. He bet against the U.S. housing market in 05, 06, 07, and 08. And he also bet against Greek debt. As you know, Greece had a restructuring, also known as a default. So I caught the tail end of that, and I said, man, what's this guy got to say? So I started doing my homework. I went and I watched the full interview with Kyle Bass, and he laid out the situation in Japan. Now, in the short time that I have with you today, I also am speaking this evening, I guess, at 8 p.m. in the workshop area. 8 p.m., I will literally stay there until all of your questions are answered. I also personally invite you to come by booth 206 with R&B Financial. I'll be there. I'm accessible. We can talk personally. We can say, well, I've got questions about this and that. Trey, you were right. You do talk too fast. I don't quite follow. Please come by the booth. I also write a newsletter that comes out regularly. You can come right to the booth and you can register to get that free newsletter. There's also a research report that's there. So like I said, stop by the booth, register for all that, and I will happily answer all those questions in due time. So I watched the interview with Kyle Bass. He says this is the most obvious situation in the history of finance. Man, I need to learn more. So I literally went to the Japanese Ministry of Finance website and started breaking down their balance sheet and financial statement. This should be slide 2 or 3. Whoever's running the slides. I'm sure it'll come up eventually. So there we go. Now, most people evaluate an individual country based on their debt to GDP ratio, which is important. What's the size of the government debt? What's the size of their economy? Pretty simple. You notice I didn't do that here. The Japanese debt to GDP ratio, Greece had a default, and they topped out at about 160%. Total government debt is 160% the size of their economy. Ouch, right? Japan's is 260% the size of their economy. But that's what's called a balance sheet discussion. I want to skip over the balance sheet, and we're going to go right to the financial statement. You notice up there it says 2012. I showed that because that's when the current prime minister was elected, Shinzo Abe. Shinzo Abe is a very important part of this discussion. We'll get to him in a minute. So if we look at their financial statement, the big 90, all that big number at the bottom, all that is an aggregate of what they take in revenue versus what they expend on this side. There should be some numbers in there that should be glaring at you. By the way, a lot of people say, if there was the slide that you don't want to miss. This is it right here, folks. Does it bother anyone that they spend more than twice what they make? Imagine I tried doing this in college. It didn't work. Imagine you make $50,000 a year, but you spend $100,000. How long is that sustainable? Let's take a look at the expense side of that financial statement. Does anybody notice that their interest expense is half of their tax revenue? Just the interest. Can you imagine if you made $50,000 a year, but you spent $100,000, and $25,000 went to just interest on your credit cards? Boy, that doesn't look like it can sustain itself to me. Also, look at the number right below that, which is Social Security expense. The population in Japan peaked 3 years ago. By 2030, you'll have 3 retired people for every 1 working age person. I'm going to make a Johnny Carson reference. I think I'm old enough to do that here. Karnak the Great predicts that Social Security expense in Japan is going to trend higher. 3 retired people to 1 working age person by 2030. That's my prediction. How's that? So, Japan, how did this requires a bit of a history lesson. This is a disaster. How did they get here? In 1991, by the way, this story should sound acutely familiar. In 1991, the Japanese had a real estate bubble that popped. Did they let those banks go under? Nope. They had big bailouts for them. Then the government comes along and they says, man, we've got to stimulate some spending. And how are we going to do it? We're going to do it with borrowed money. Sound familiar yet? So the Japanese start the greatest stimulus program in the history of the universe. And what have they gotten in return? This is the Keynesian model, right? Man, the people aren't consuming. We've got to spur some growth with some increased government spending, and we're going to do it with borrowed money, right? That should work. So with all of that debt, 260%, the size of their economy is now tied up in debt. All that stimulus got them what? The Japanese economy today is the same size that it was in 1991. Why that is not a complete repudiation of dear John Maynard Keynes, I will never know. But it isn't working. So go to the next slide, please. By the models that I've been working on and looked through the spreadsheets, this, that, and the other, this is how I calculate it out into 2016. Note the Social Security expense going up. Notice the debt service continuing to go up. It's obvious. But guess what? My model is wrong. Wrong? Trey, you just stood up there and said your model's wrong. In my list of assumptions, I have a GDP growth around 1.5%. The IMF came out last week and downgraded the growth prospects of Japan to 0.7. So I'm too optimistic. So, next slide, please. Here comes the hero of the day, Shinzo Abe. Shinzo Abe gets elected December of 2012 under these promises. Shinzo Abe comes in and says, we've got to turn things around. So what have we been doing? Well, we've been spending borrowed money, expanding the size of the government, and we're just not doing enough of it. Oh, let me get this straight. You're doing something that's not working, so the answer is to triple it. Let's do more of that. Okay, all right. So Shinzo comes in and he says, we got to increase spending. Oh, imagine that, a politician that wants to increase spending. There's a shocker. We got to weaken the yen. Okay, so his idea here is that if we weaken the yen, never mind that the yen is going to become weak because they are absolutely ridden to the ground in debt. How are they going to buy all those bonds? They're going to print more yen to do it. So he puts in a new head of the Bank of Japan, and this new head of the Bank of Japan says we're going to double the money supply. Oh, I must have missed that in economics class. If you increase money supply, then growth comes with it. Didn't in Japan. So he says we have to weaken the yen. So in comes the head of the new Bank of Japan. His name is Kuroda. Also an MIT guy, but we're going to let that slide. So Kuroda comes in and he says we're going to double the money supply by buying more bonds and we will all live happily ever after. Next slide, please. What has been the result? The IMF was targeting 1.5% growth. They've just lowered that to 0.7. The other weird thing about currencies is that the idea was if we weaken our currency, we'll see a growth in exports and we'll all live happily ever after. We're going to export our way out of this. The Japanese current account deficit just set a new record low, I know most of you people know what a current account deficit is. It's how much did they import, they buy from other places, versus how much did they export. No, if we just export, we'll be okay. But if exports are supposed to be going up, then why is the current account deficit getting worse? I'll tell you why. Because Japan doesn't have a reliable source of natural resources like oil and minerals and things like that. So it has to import it. So a weak yen actually hurts that. Oops. Unintended consequences of economics, right? And government involvement, et cetera, et cetera. They have successfully, by the way, this is a side note, I'm dying to know who inflation hired as their PR person to convince us all that inflation's a good thing. But I mean, it's one of the greatest tricks the devil ever pulled, was convincing us that inflation works, that inflation's what we want. So now let's look at the results of what Shinzo Abe comes in and does. The economy's growing slower than forecast. The current account deficit's getting worse. The Bank of Japan balance sheet continues to swell, and once again, Karnak the Great predicts that the Bank of Japan is going to have to pick up the slack here, folks. Okay? And the 10-year Japanese JGBs, or Japanese government bonds, the yield is 0.54%. Let's put yourself in the seat of a Japanese person. The yield on my money is 0.54% for 10 years. CPI is up at 3.3%. And the economy's not growing. And everything that I'm having to import and buy from other countries costs me more. Why the Japanese citizens aren't freaking out, I'll never know. Okay? So, let's wind this into an investment thesis, and let's talk about what I think are possibilities. Number one, I think the chance of the Japanese paying back those bonds, in my opinion, is zero. I think there's opportunities as that bond market goes down. Here's the pushback to me. Trey, I've been watching all this stuff about modern monetary theory, MMT they call it. They can never have a bond crisis because they can print their own currency and buy their own bonds. The United States is doing it, Europe's doing it, et cetera, et cetera. As long as they can print their own currency, no problem. Gee, that smells like an opportunity to be short the yen to me. If that's the only buyer left, is the Bank of Japan, guess what? Today, the Bank of Japan is 70% of all new issuance. Every new bond that comes out, 70% of them the Bank of Japan buys. Okay? So, that smells like opportunity in the yen to me, because they're going to have to keep printing them to keep buying this debt, right? However, here's where I would push back on what I said, the MMT crowd. If they can print their own money, their bonds will never break. Really? Think of what a bond is. A bond is an IOU. I give you yen, you give me a security. It's an IOU. You're going to pay me back. So I'm holding this security, seeing the currency that you're going to pay me back in is dropping. What is the likelihood that I'm going to hold on to that security? I say that likelihood is pretty low. So for me, like I said, I see opportunity on the yen side. But at some point, I think the yen becomes so weak that these bondholders say, bleh. That's a trading floor term, by the way. Bleh. Okay? And I think that day is coming. Why does it matter to you? The reason it matters to you is that Japan is the third largest economy in the world. Okay? When Lehman Brothers did what it did, that was a really bad thing. When Japan does that, that's going to make Lehman Brothers look like a picnic. Now, I only had 20 minutes. The workshop is this evening at 8 o'clock. I'll be there covering this in more detail. I'll get a little bit more specific about what I'm doing, what I see, that sort of thing. You can ask me all the questions. We're at booth 206. Please come by. I will make myself available. I apologize for talking too loud, for talking too fast, but I will be here, and I'm not going anywhere. I don't want to miss Alan Greenspan either. So I'm going to be here to see that. I'll be here till Sunday. So I'm around. Thank you very much for your time.